Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. We have some great shows coming up for you, including a show on success strategies for commercial agents. Be sure to catch topics of special interest to you. Sign up for a once-a-week email announcing the show topic at commercialrealestateshow.com. Well, today we're discussing the healthcare industry and commercial real estate. Please welcome my next guest, Paul Zeman, President, National Healthcare Capital Markets Group and partner with Bull Realty. Paul leads a team focused on assisting clients with the acquisition and disposition of medical office buildings. Paul, thanks for joining us today.
Well, good morning. It's always great to be here.
Well, we appreciate it. And Paul, just how popular is healthcare real estate right now? What kind of volume did you see in 2013?
You know, Michael, I think that 2013, we're going to wind up just somewhere in the ballpark, $6 billion, a little north. We saw through the first three quarters about $4.5 billion. There's another $1.2 billion that's been done so far in the fourth quarter now. And we're going to wind right up about where we did last year, a little over $6 billion.
Okay, so the trend is relatively strong and flat, you'd say, for volume?
Yeah, I would say that it is.
Okay. So what do you expect for volume next year? I mean, as you heard from our friends at Deloitte, we're expecting a lot more demand for real estate in general. Do you expect more volume for investment sales in the medical office building market? You
know, I do think that we'll see a bit of an increase. I don't think that it will be substantially higher than what we saw in 2013, but as we're needing the space, we're needing more medical office space, and we're seeing more under construction right now, that will probably tailor to much higher figures maybe 2 and 3 years down the road.
Okay. And what is the attraction of medical properties, Paul, for investors versus non-medical office?
Well, I think that probably the biggest factor is that we all know who our doctors are and who we like, and they've pretty well been in the same offices as long as I can remember. So a lot of times private practices are very unlikely to move, and in certain states like we have here in Georgia, that's a certificate of need state, depending upon what type of equipment or whether it's a surgery center, imaging center, they might not be able to move.
Okay, so the stability of the tenant is a great aspect of medical, isn't it?
Yeah, and they can pretty well always pay their bills.
Right. Well, we hope they can after the Affordable Care Act comes in as well, right?
We'll see.
Okay. Well, how much demand for medical office building space do you predict moving forward, and how much of that demand is from Obamacare?
You know, theoretically, if 25 or 30 million more individuals or Americans have access to health care, it's going to increase the demand for medical office space. But I'll say even outside of Obamacare, I look back to some of the hospitals, say here in Atlanta, for example, that 10 and 15 years ago, you could drive up to the front row of the hospital and park and walk right in, and now you're buried in the back of the parking garage 100 yards away, and somebody picks you up on a golf cart to drive you 200 yards to the front door. So even without Obamacare, we have seen some significant growth.
Okay. And when you look at the healthcare sector overall, what do you expect for 2014 property level performance? I mean, how stable are occupancy levels in these buildings, and what do you expect moving forward?
You know, I think that the occupancy is gonna stay very strong. In fact, the vacancy rate nationwide has decreased like 15 consecutive quarters, and now we're on the tail end of just starting to see an uptick for the past 2 quarters in average rental rates. So that's a trend we like to see.
Okay. And you mentioned construction levels. Where has construction been over the last several years?
You know, the majority of the construction that I've seen is on campus, and it's hospital sponsored. You're not going to see many spec medical office buildings even near a hospital just in hopes that they can be leased out. They're very difficult to borrow on. The banks are not lending on projects like that still. And a lot of developers are really bashful to put a shovel in the ground until they have a firm commitment on 60% of the building or more.
Right. And it's interesting because I think we are starting to see some spec regular office buildings, but you've got a lot larger pool of tenants for those, right? So for the medical, a little harder to lease up a spec building, right?
It is, and as well, a lot of the more savvy tenants want, there to be exclusions in the lease, or they want to have rights that maybe they're the only orthopedic clinic in the building, or they're the only imaging center, or certainly the only pharmacy, and that's going to restrict some tenants as well.
Okay, and short on the break here, but tenant mix is important in these medical office buildings, isn't it?
It is. It's really nice though when you get a synergistic effect of tenants that can refer to each other, makes them happy tenants and in it for even more than the long haul.
Okay, so that's something you're looking at in investment sales, is that the type of tenant, so not just the length of the lease and the credit, but how the mix is, almost like retail.
It's just a bonus.
Okay. All right, well, stay tuned. We're going to have more intel on the healthcare real estate market. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Glad you're with us today. You're invited to check out the Commercial Real Estate Show on YouTube. You'll find a great selection of videos like Reese on Real Estate and the Fed's View on commercial real estate. You're invited to subscribe so you don't miss a show of special interest to you. So visit YouTube and search for the channel Commercial Real Estate Show. Well, today we're discussing the healthcare industry and commercial real estate. We're talking with Paul Zeman, President of National Healthcare Capital Markets Group with Bull Realty. And Paul, let's talk cap rates. Everyone seems to be interested around the country in cap rates. And how have cap rates for medical office buildings trended in 2013?
In 2013, they remained pretty steady. We saw some pretty good cap rate compression really back since 2009, and I look at 2009 as kind of that year of correction. Sometimes you hear a Wall Street analyst say, "Come on, correction." Well, that was a correction, and it kind of let everybody kind of get their wind, whether they liked it or not. So we've seen some good compression by then. First 6 months of 2013, we actually were right at about 7% as a whole. Third quarter, we were about 7.3% nationwide. But there's a lot of things there's a lot of exceptions either way. There were some 6 cap transactions. There was even a sub 6 transaction here in Atlanta. And then a lot of other factors are going to come into play as to where this goes and maybe what a particular property is worth, location, proximity to campus, hospital sponsorship or no hospital sponsorship, the structure of the leases, the escalations, the terms. There's a lot more than just sticking a percentage on an income.
Well, that's a good point. I think when some people ask, well, what are cap rates? As well, it's gonna be different for every building. So you got to look at it very closely. Well, if you look at the overall market again, and you compare medical office buildings, Paul, to the regular office buildings, what's the difference in cap rates there?
The difference in cap rates between medical office and regular multi-tenant office has typically been about 50 basis points lower for office versus medical office.
Okay, so you get a little better return on a medical building.
Theoretically, yeah.
So what's the reason for that? Why do you get a little bit better return on a medical building, even though you have possibly more stable tenants?
Well, sometimes people ask me, what's the difference between medical office and office? And I say, well, medical office is just really complicated office. Right. There's a lot more going on. There's some more moving parts. The tenant build out is typically much more excessive. There's different types of medical equipment that are very difficult to install. There's a lot more going on there. You may have stark rules. Like we talked about, somebody might want some exclusions as to the types of other tenants that are permitted in the building. It's just a little more complicated, just a little bit more moving parts.
Well, that's a good point. We have a regular office tenant reps, and we have healthcare tenant reps, and the regular office tenant reps I don't really want to handle the medical space. Let you medical guys do that. Well, also to put this in perspective of the medical office market, what is the size of the medical office building market compared to the normal office market?
Well, like we talked about a little bit earlier, say in 2012 and again now in 2013, we're right around that $6 billion mark. If you look at just strictly single tenant office, total transactions trailing 12 months were $14 billion. And if you look at multi-tenant office, it's another $74 billion on top of that. So, medical office is 7-8% of regular office.
Okay, so if you want to buy a regular office building, you have a lot more choices.
Without doubt.
Okay. Well, what do you predict for cap rates moving forward in 2014, Paul? I mean, we hear about all this demand and not much new construction. From the outside looking in, you would think, well, there's going to be some cap rate compression coming.
Well, Michael, in 2014, I think that we're going to see cap rates in the same type of window that we have for 2013, between 7 and 7.3 on average. We may see some raising interest rates, which should, in fact, bump cap rates up a little bit. But as long as the investors that are out there are raising more capital than we have to transact on, it's going to be a very competitive market, and I really feel like the cap rates are going to remain stable right now.
Yeah, well, that makes sense to me. Like you said, even with rates increasing a little bit, interest rates, that is, you should see more demand in this space. I mean, it's a safe space. There's a lot of capital moving from foreign investors and some from other sectors moving into healthcare. You're seeing a lot of demand in the space.
We are seeing more demand in the space, especially when it comes to, say, off-campus properties. We used to see a cap rate spread of as much as 150 basis points for an on-campus versus an off-campus building. And while the on-campus hospital-sponsored MOBs are still the most sought after, especially as the healthcare systems have been expanding out into the suburbs to reach the communities and leasing space there, we're not seeing 150 basis points anymore. It may be more like 25 to 50 basis points, which is not unreasonable.
And we're short of the break, but who are the typical buyers buying these properties?
It's predominantly the publicly traded and private healthcare REITs. However, I have seen and been involved in some transactions recently, high net worth individuals, private family trusts, and some private equity firms.
Okay. All right, we're going to take a short break here. Stay tuned for more medical office building magic. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you in part by France Media. France Media provides exposure to the world of commercial real estate. Visit francemediainc.com or call 404-832-8262. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. We're excited to announce a new service on the show. It's called Ask Michael Bull. Each business day, I will answer a listener's question on video. You can check it out at the Twitter account, Ask Michael Bull, or on the YouTube channel, Commercial Real Estate Show. Today, we're discussing the healthcare industry and commercial real estate. We're talking with Paul Zeman with Bull Realty. And Paul, I'm curious about, you're talking to these owners of office buildings every day, these investors every day. I know you have a lot of relationships with them. Are any of them telling you positively and negatively how they feel about Obamacare? Do they feel like because of Obamacare that this is it's great to own and buy more medical office buildings, or do they think that maybe because their tenants might get squeezed on reimbursements that they might get squeezed on tenants? What are they telling you?
Well, that potentially could be one of the pitfalls, but let's talk about what's positive first, okay? And that would be the increased patient flow. And we've known that all along, that the Affordable Care Act is supposed to increase the patient volume. It is going to decline reimbursements, but we don't know how much it's going to increase volume. We don't know how much it's going to decrease reimbursements or revenue. But I would say that the positive, the demand on the medical space will probably outpace what what some of the negatives are in terms of maybe of tenants getting squeezed in reimbursement or maybe the effect on the overall economy. I do believe that the need for healthcare is going to be there, and these investors are still very comfortable with the sector, and we're seeing more investors come to the table. Foreign funds, high net worth individuals that are thinking, hey, it's time to buy some medical buildings.
Okay. Well, we have all these baby boomers coming of age, and they want more health care maybe than their predecessors. I mean, I guess I'm a baby boomer because I'm 25 now.
Okay.
So
You look good.
Thank you. So it's interesting though. So they're not telling you because of Obamacare and all this increased demand that it's a great thing to buy health care. They're just not telling you that. They just feel like overall the sector's strong.
The sector is strong.
Yeah.
The bottom line, and in my opinion, it's the strongest sector in commercial real estate.
Yeah. Well, you really.
Yeah, of course.
You're prejudiced.
I'm a little biased.
That's what you do.
Sure.
Okay. Well, do you have some tips, Paul, for medical office building owners out there?
I would say that it's always a good time to put in place an exit strategy if you don't already have one, and just to evaluate where you are with how much term is left on your leases, maybe where your existing loan is if you do have a loan, and where the cap rates are. That if now is not a great time to sell, will it be there in 3 years, or will there be not enough term left on your leases to make it sellable or financeable, for that option. So I would say that it's always a good time to sit down, and I'm happy to help or to be involved in any way, shape, or form to do a complete analysis on the property.
Well, I think it's a good point. You want to think of your exit strategy before you buy the asset, right?
Well, yeah.
And as you asset manage it in the entire way. I think it's interesting how many clients that we've all had in this industry that look back before the downturn and say, gosh, I wish I'd have sold. So we look at the market right now. We've got great interest rates, a lot of demand. So it may be a good time to at least consider it. And if it's not time to sell, know what to do to get your leases and property right to maximize value when you do get ready to sell. Right?
Exactly, and that's a very big part of the business plan that my team puts together. It really all revolves around maximizing asset value, and there's a lot of moving parts, but we've pretty well nailed it down.
Well, Paul, thanks for joining us today. We appreciate it.
Appreciate being here.
All right. Well, you're invited to join us next week. We have a great show in store for you. My guest is Rod Centomassimo with the Massimo Group, and he'll discuss sales and business development. And the week after that, yours truly, Michael Bull, I'll share the top 10 success strategies for commercial agents. So be sure and join us. And if you're listening to this show at the Christmas and New Year's time, hey, from our family to yours, have a great holiday time and a great period with your family. Thanks for joining us today. I'm Michael Bull. Until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by your friends at Bull Realty, France Media, Atlanta Office Liquidators, and Wiseman, Nowak, Curry, and Wilco. For more information about these companies or to access additional show podcasts, videos, or blogs, visit commercialrealestateshow.com.